Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with the Rise Mortgage. Grab a bubble tea and enjoy the episode.
Happy New Year, everyone, and welcome back to the first episode of the Asian Connection Mortgage Podcast in 2026. And today I want to walk through my personal predictions for 2026 in three key areas. I'm going to share them with you. Number one would be the Bank of Canada interest rate. Lots of people want to know, where's the interest rates going to head in this year? Number two would be the Metro Vancouver housing market. Are prices going to go up, down, sideways? What are my predictions? And the last one would be the S&P 500 and what it might mean for your investments. So these are my own views based on what I'm seeing in the data, in the news, and chatting with different clients, realtors, and advisors. So this is not personal finance advice whatsoever, but it should give you a framework for how to think about the year ahead. So let's get started. First off, Bank of Canada. So I think we'll see rate increase in the fourth quarter of this year, 2026, of about 0.25%. And that's pretty much it. On this end, I feel like it's gonna be a little bit boring, but I guess when it comes to rates, boring is good. We want some stability. So at the time of recording, it's January right now. I truly think rates are pretty much done. It's going to be flat. And then maybe sometime in September, October, we're going to see one rate increase of 0.25%. I know some people, they're like, oh, economy is so bad and there's so many things going on around the world. Rates are going to keep going down. In my opinion, I don't think so. So here's why. So I think inflation is still a problem. I understand inflation has come down, which has given the Bank of Canada room to decrease the rate, but it's really not perfectly like solved. Over the past years, inflation has come down, but it's been very sticky in services. So like rent, insurance, and some wage-driven sectors. And of course, you guys all know the Bank of Canada's target rate inflation is 2%. And most forecasts suggest we are around that range. But we can easily get a small upside surprise from areas like energy prices. There's geopolitical things going on and wage pressures. So wage may go up. So inflation drifts a bit above target late in the year, or if there's growth that's stronger than expected, then the Bank of Canada has room for a small increase of 0.25%. The bank also wants to keep expectations anchored. So Bank of Canada really cares a lot about expectations. And if people start to believe that we actually want inflation to be around 3 or 4%, that sets the prices and the wages that way. And it becomes, we call it like self-fulfilling prophecy. So people expect 3 or 4% and it just becomes 3 or 4%. Bank of Canada, I believe, wants to keep it at 2%. So they want to show to the public that they are serious about this mandate. And if it does go higher than 2%, then they're going to increase the rate. Number three is the economy is slowing, but it's not crashing. So most bank and government forecasts for Canada describes like slow growth or they want a soft landing. And we're not really in a deep recession. I understand, unemployment is higher than the lows we saw before, but we're not really at crisis levels. In that environment, the Bank of Canada does need aggressive hikes, but it also doesn't need to rush into aggressive cuts. So that's why I believe that rates are going to be stable. And if really needed, inflation ticks up, then they're going to increase it by 0.25%. So what does that mean for borrowers? But for those who have variable rate, then the rate will increase by 0.25%, but it's thankfully not a huge jump, unlike what we saw back in like 2022, 2023, when rates skyrocketed. Bank of Canada, I believe, just wants to keep things stable. We're going to see fixed rates increase this year, and more borrowers will transition or will prefer variable rate more than fixed rate simply because it's the lowest rate. So, number two is the Metro Vancouver housing market. So, what do I think about that? So, my prediction for 2026 for the housing market is condos will continue to drift down by about, I would say, 2 to 3% this year. And this really sucks because 2 3% might not feel like it's that much. Maybe it's normal, but we've been been decreasing for the past 2 or 3 years when it comes to when it comes to condos. There's just so much supply, and there's not much differentiation between one bedroom versus another one bedroom in the same building or in another building. So there's just no, as long as there's one person who is more desperate to sell than the other seller, then that just sets the price. Townhouses and detached, I believe, will remain flat, maybe a slight increase of inflation, maybe 1 or 2%. So here's why. So, like I said, condos, there's just so much pressure on it. Over the past year, there's been a lot of inventory existing already, and then all these pre-sales are closing, causing even more supply in areas such as Surrey, Metrotown, Brentwood. Yeah, I mean, you see them like with all the cranes, and there's building, and they're completing, and there's so many being flooded into the market. And the issue is that many of these buyers, they're investors, and some of them can't even close. And on top of that, um, what they purchased it for, many of them are losing money. So they want to cut their losses. So whatever the price it would be, market price, they might even sell it for below market. And whenever someone does sell, it sets the price for a comparable, and the remaining inventory will be set at that price. Um, yeah, so on top of that, uh, when it comes to townhouses and homes, why I feel the prices are going to be stable is because there's a lot of people who are upsizing. So for those who have owned condos for a few years, even though prices have dropped, they're still going to be making money, and there is opportunity for them to upsize from a condo to a townhouse, or maybe like a two-bedroom to a house. Because yes, the market has come down and they might sell at a loss, but they're also purchasing at a maybe a better deal. So there will be a demand for townhouses and house. And on top of that, when it comes to townhouses and house, the layout for each property is quite different. And so some products, like some of the properties, they will be more ideal. They might be the layout might be better. There's land. So these things do attract more buyers. And it's obviously everyone's dream to own land. So there will be a continuous demand for these type of products. So number three, let's talk about S&P 500. So the S&P 500, that is the largest 500 companies in the US. And it's a benchmark that lots of investors use to see what the market return is, and they compare the performance based on the S&P 500. So it's US based, but because US is such a large economy, people view it as an international market because many of these large 500 companies, they do business internationally. So this is what I think when it comes to the S&P 500. I believe that there is going to be a major correction of about 5 to 10% at some point during the year, maybe Q1 or Q2 of the year. But it's going to recover. And by the end of 2026, we're probably going to see the S&P 500 up around 6 to 8%. So here's why I think so. So market rarely goes straight up forever. For the past 3 years, there's been really strong returns. It's been double digit returns for the past 3 years. And historically, after a strong multi-year run, it gets really hard for like the fourth straight year of big double-digit gains without at least a pause or a pullback. So it doesn't really mean there's a crash that's guaranteed. But I do see the AI sector, it's a little bit more excitement in that area. But the good thing is there are numbers that are backing it up. But in the event there's one company where the report misses expectation just by a little bit, people get freaked out and they're gonna sell. And I believe that's where the correction is going to be. And yeah, just in general, the S&P 500, the valuations are elevated, and there's just gotta have some give. And I think it's going to be healthy. Uh, but after the correction, people will see an opportunity on the buy low, sell high. And in the end, we will see the market coming back again, not like what we've seen in the past few years, but it will be a normal return, which I would say is 6 to 8%. So these are the predictions that I believe will be for 2026. Perhaps in the comment section, you can let me know what your predictions are. So just to have a quick recap, Bank of Canada, I think one increase, 0.25% rate hike in Q4 of 2026. Metro Vancouver, housing market, condos down 2 to 3%. Townhouses and detached homes, we're going to see probably a 1% or 2% increase. And the S&P 500, we're going to see a correction first half of the year, and then it's going to rebound and end off 6 to 8%, because I just can't see how it's going to be double digit for the fourth year. But we will see. Hopefully, I am wrong. So thank you so much for listening to another episode of the Asian Connection Mortgage Podcast. Let me know what your predictions are. And if you found this helpful and you want to talk to me about interest rates or just talk about more of what I think 2026 will be, feel free to reach out. If you enjoyed the show, share with your friend, leave a review. It helps more people find this kind of honest and practical content. And I will see you in the next episode.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the